Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be going over one of the best trades that I took in 2023, and this was a trade on EURUSD which ran for 1 to 10 risk to rewards. I'm going to be teaching you guys the system of trading that I used to take this trade so that you guys can hopefully mirror it in your own day-to-day trading. So before we get onto the good stuff, let's just quickly go over this trade and how it was sent to the team as a signal in the time of around July. So a mid-year trade. Yeah, it ran for over 10 hours, 150 pips, and it was of course one of the best signals that I sent for 2023. You guys can see here the before and after. So sent here, entry SLTP, and then over here full TP, as well as the constant updates such as break even and 5RR, take partials, etc. So guys, if you guys are looking to get into the mentorship for the lowest price ever, right, for literally under £100, right now we have the Christmas / New Year sale for £99 one-time fee. You get access to everything, as well as my 2024 mentorship updates that I'm going to be starting in January. So guys, if you want to get access to all of those things, make sure to check the first thing in the description for the lowest ever price I've done for the mentorship at £99, under 100 one-time fee. So yeah, make sure to check out the first link in the description, and I will see you guys there. But without further ado, let's get right into today's video. Alright everyone, so the specific system that I had used for this EURUSD trade was actually a sort of swing system, right? And it wasn't my usual sort of aggressive entries on the 5-minute or 10-minute or maybe some sort of confirmation entry. Instead, I had initiated the ideas of this trade from the higher time frame. So what I was looking for was a break of structure or liquidity sweep on the higher time frame, which is being represented by this over here, right? So all of this action is supposed to be on the higher time frame, right? Let me quickly write that in. So this is the higher time frame, right? And what we're looking for is a break of structure or liquidity sweep on the higher time frame, okay? And then if I quickly say this is the middle time frame, right? So we're maybe talking about the 30-minute here. And over here, we're looking at the, for example, 4-hour, right? So, like I said, I'm looking for a break structure or liquidity sweep on the higher time frame. So, right here, let's say we're on a 4-hour and price just swept off this 4-hour liquidity point, which is also a 4-hour high, right? A 4-hour swing high right here, right? So, after price sweeps this high, I'm going to have a bearish bias because if we look at all the previous examples on this chart, right, after price takes out a major liquidity on the 4-hour, we see a retracement towards the downside, right? Price sweeps it, eventually we see a retracement towards the downside. Price sweeps it, we get that up move, and then eventually we're expecting a retracement towards the downside, right? So now that we've got that established, we can now talk about on the higher time frame. After we have our liquidity sweep and break of structure, we move on to the middle time frame, for example the 30-minute, right? And if we zoom into this part right here, we're going to be looking at this kind of price action, right? What I want to see is, so if I quickly write in 30-minute here, on the 30-minute time frame, what I want to see is price reacting from this liquidity sweep, right? And what a reaction looks like is, you know, price slowing down in momentum, consolidating, sweeping some highs, and then giving us a change of character towards the downside, right? And a change of character towards the downside on this time frame would be, for example, price breaking through some order flow, right? So breaking through this bullish demand zone, right? Or for example, breaking through a protected low right here, right? So obviously in a bullish trend, right? Because over here we're bullish, you guys can see the high highs and high lows being created. So if we see one of these protected lows being taken, then that would obviously mean a change of character, right? So on the 30-minute, I am looking for my change of character after price sweeps the high on the higher time frame, okay? So that is step 1 for this system. Now, step 2 is finding your entry from S&D that has swept liquidity or inducement, right? So now that we saw this on the 30-minute, you know, we can stay on the 30-minute, maybe move to the 10-minute or 15-minute, right? And we're going to be looking for a supply zone, in this example, which has swept liquidity and has inducement, right? Because these are the most valid levels of supply and demand, okay? So right here, we can see that price created these equal highs, swept it. The move that swept it created a nice little order block. Now this order block obviously has broken structure with that change character, or just has broken structure right here and right here, right? And it has a level of inducement. So yeah, we need to look for the supply and demand zone, or just the supply zone over here, which has a liquidity sweep, which has inducement, and has obviously all the other rules which make it valid, which you can check out in my other videos. But yeah, that is a simple second step, and this will be where our entry will be. So entry here, stop loss here, and TPs is step 3. So we switch back onto the higher time frame, right, for our TPs, and we go and aim for levels of demand or fair value gap. Now, why are we aiming for levels of demand or fair value gap instead of aiming for a low, right, as you guys may be thinking about? Is because if overall we're bullish on the higher time frame, we can't aim for lows to be swept. We have to respect the higher time frame, and we have to go for levels of fair value gap or demand zones where we know that price can potentially bounce from. And you know, we don't want to get into that situation where price is bouncing from a level and we're still in the trade. We want to exit at the levels where price could potentially bounce from, so that we secure the most amount of profit possible. So again, reiterating that once you're entered in on the trade over here, your TPs must go at opposing levels of fair value gap or an opposing level of supply and demand. In this scenario, it would be a demand zone, for example, over here, or one over here. And again, this is to make sure that our trade stays safe and we can maximize the amount of safe profits that we can get. So guys, that is basically the 3-step system that I've got in terms of swinging. It's a very, very simple system, but you know, all of my system are quite simple. So what we'll do now is we'll move on to the real life chart example on Euro USD, and we will break down the best trade, or one of the best trades for Euro USD for 2023. Alright everyone, so here I am on Euro USD on the daily time frame, and we're now going to be going through the 3 steps for this system. Of course, step 1 being that we need to see the higher time frame bias, hence why I'm on the daily. So let's go over that right now. So first things first is that on the daily, I noticed that price swept over this major level of liquidity, right? And we also swept these other 2 levels of liquidity as well. So we have this little internal liquidity sweep right here, this liquidity sweep right here, and this little external liquidity sweep right here. So 3 liquidity sweeps pushing the market towards the upside, and eventually we're going to reverse towards the downside, right? And you can see that these were significant sweeps as price really gained its momentum and volume and pushed up quite heavily after taking out these levels. So now that we've seen that, of course, I can shape my bias in a bearish manner, because on the middle time frame we're expecting retracements in towards these levels. So what I like to do now is on the daily is I like to see where price is going to potentially retrace to. So I like to make these little reference points of where I think price is going to retrace to. And the first thing that I can notice is this little fair value gap right here. So what I'll do is I will mark it up and get the 50% level right there. I will also do the same thing with this fair value gap right here. And so we've got the 50% here, we've got the 50% of here, right? So these are the points that I think price is going to retrace to when we get our entry. So I know, you know, for future reference, where price, you know, may retrace and react from, or, you know, retrace and react from, okay? So we've done our daily analysis over here. We know the points of liquidity that have been swept. We know that now our bias on the middle time frame will be bearish, and we now have these 2 reference points of opposing fair value gap. So now what we do is, for step 1 is we continue with step 1 onto the 30-minute time frame, and now we can analyze and see what has happened after price swept that daily high. So this is the daily high sweep, and now we can see price is, you know, losing momentum and starting to shift from bullish up here to shifting to bearish, right? And now let's look for those specific points which told us that. So first things first was, I had noticed this little consolidation range up here, right? I noticed this consolidation range and I said to myself, okay, cool. So price has made this consolidation and we had broken out towards the upside, right? So this was going to be our sort of last liquidity sweep towards the upside, you know, our last major sweep towards the upside before price has its reversal towards the downside, right? And I has also noticed that after price had swept towards the upside, yes, we started to see retracement, but that retracement also broke through these lows right here, right? So this right here gives us our market structure shift, which is exactly what we need for step one to validate our bias from the daily time frame. So we now have our change of character and we are starting to shape our bias towards the downside and we have our higher time frame bias. So that is step one done. Now we move on to step two, which is trying to find our entry point from a supply demand zone that has taken out liquidity and that has inducement. So let's get on with that. Before I get onto that, actually, I just want to mention that we also started to see bearish order flow starting, right? Which is another indication of us coming into a bearish retracement sort of phase on your USD up until our reference points. Okay, so we can now find our supply zone, which is of course right here, as this was the move which dropped price towards the downside and broke off this structure right here. So we've got a break structure right there. Now let's look for the liquidity sweep and the inducement to validate the supply zone. So of course, we've got our liquidity sweep right here. Price taking out this level right here. And we also have this level of inducement right here because price has given us this supply zone right below our actual zone. So we've got, let me just put this towards the bottom. So yeah, we've got our supply zone right here, which is below our supply zone that has swept liquidity, so that we know that this zone is going to be taken out and price will tap into this level. Okay, so that's step two done, right? On the 30-minute, we found our supply zone, which has taken out liquidity and has inducement below it. All we have to do now is set our limits, right? Stop loss at the high, you know, give it some breathing room. And now we can start aiming for our reference points. So right here, we have this reference point, which was about, I think my stop loss was at the OB maybe. Yeah, giving us about a 1 to 10. I think I might have pushed it towards this. I think this was an Asian low or somewhere in here there was an Asian low. But yeah, my TP was around this point. Okay. And this is basically all step three is, because we did that previous analysis on the daily, right? We know where the reference points will be. We could even aim for this fair value gap right here for this 50% and go for a 1 to 20. But I like to keep things realistic because 1 to 10 is way more than enough. And so we'll keep our targets over there. Now we can go to the 30-minute. And after our 3-step swing process, we can see how this trade ran. Okay, so we've tapped in right there. We go across. Give us some time. So yeah, price instantly starts crashing down. And yeah, TP hit in the space of, I think, 4 days right there. 4 days of holding for 10 RRs. And yeah, you guys are going to see how much price crashed down after this as well. So yeah, let me quickly just switch on to the daily. I think price, yeah, so price comes way past reference point 1. So you could have held for even longer. I don't know if it reached reference point 2. Yeah, it did reach reference point 2, and I'm guessing price, yeah, so price just completely plummeted after this point. So you could have held this for something crazy, but again, keeping things realistic, this is what I sent to the team. This is a target that I sent, so it was a lovely 1 to 10. But yeah, guys, hopefully you guys can implement this system going forward in 2024. This system is valid and it can be adapted and tweaked for certain pairs and certain times. So yeah, it's a very flexible system and I hope you guys can use it and benefit from it. But yeah, make sure to check out the first link in the description to get that £99 one-time fee discount for the mentorship. And if you guys do decide to join, I'll see you there. But thank you very much for watching today's video, and I'll see you guys in the next one.